They call it Woodstock for capitalists. On Saturday, Warren Buffett answered questions in front of thousands of investors at the annual Berkshire Hathaway shareholders meeting in Omaha, Nebraska. And to tell us all about the meeting, as well as some key takeaways for you as an investor, we've got Cathy Seifert, who is the CFRA Vice President of Equity Research. Cathy, great to grab some time with you here. First and foremost, we heard Warren Buffett talk about everything from artificial intelligence to Apple to Paramount and much more here. I wonder what jumped out to you from his investing methodology that investors have come to expect over the years that really stood out at this particular year's event.
Well, I think, when we look at what transpired on Saturday, I think the one thing that stood out, given that succession is an issue, is that he really, he was point on, he was spot on, he was very articulate. I think there was one time when he was a little meandering, but, I think that the dynamic and the chemistry between Warren and Greg Abel was a significant component of this meeting. As it relates to his investment strategy, I think investors can take away, sort of two key tenets. Diversification and, time is on your side. He is not an active trader. He is definitely a buy and hold sort of an investor. I think people might have been a little surprised at the large slug of Apple stock that Berkshire sold. I think that's an appropriate rebalancing given how well the stock had done for the company. It hasn't done that, that great this year, but historically for Berkshire, it's done well. So, in some respects, it was more of the same, which is comforting when your chairman is 93 years old.
Do you expect investors to also then kind of heed or listen into what Warren Buffett was saying about building up a solid cash position for right now in order to have that dry powder to be able to deploy later on? And if that is the thinking that many investors come out of this with, where might be some of the areas that Warren Buffett is looking at that they might look at as well?
Well, if you look at Berkshire in its entirety, there's the operating businesses that tend to be, it's an insurance-based conglomerate with exposure in energy, utilities, rails, and a number of consumer areas. And then their equity position tends to be barbelled between financials and technology. So it's an interesting combination of it's a very diversified mix between what they have equity positions in and what they have as an operating basis. Now, the average consumer, the average investor, can't necessarily replicate that. You can with a broad-based, an ETF that tracks the S&P 500. And honestly, if you were to talk to, the late Charlie Munger and Warren, they would probably tell that of the average investor or, invest in Berkshire as a proxy for all of those businesses. I think it's interesting, though, that when you talk about their cash hoard, the cash keeps accumulating. Profitability is decent. They've got really attractive yields in their investment income that's throwing off a fair amount of cash. And I get the sense, and I've gotten this for a while, that there is a little bit of frustration about their inability to target and close on a significant deal. And so they've kind of tamped down investors' expectations for what their deal-making activities are going to be. It still remains a favorite topic of conversation among investors, but that cash hoard, my sense is at some point there may be pressure on them by investors, maybe after Warren is gone, to pay a dividend and do something with that cash.
Coming off of this meeting, you mentioned the chemistry that the investors were seeing on stage. And really thinking about what the succession plan could look like. Does it feel like there's confidence at this juncture in that succession plan and what the decision making would look like for Berkshire Hathaway even after Warren Buffett steps away?
Well, I think there was one interesting revelation that came out of the meeting, and that was a sort of offhanded comment that Buffett made about capital allocation. And I think the conventional wisdom was that the investment team would have a hand in some of the capital allocation. But Buffett said that his preference would be to sort of consolidate all that power around Greg Abel. And that's kind of it was a significant point that he made, given that the way Berkshire has communicated their succession planning, they had a plan in place. They weren't really articulating it to the investment community. The fact that Greg Abel was the heir apparent sort of came out a couple years ago in almost like an offhanded comment by Charlie Munger. So this was another kind of offhanded comment that actually had a lot of weight to it because Greg Abel would consolidate a lot of power. Whether or not he chooses to keep all that power is something, but it would, under the plan that we're led to believe is in place now, he would accrue a lot of the same powers that Warren Buffett currently has.
Yeah, then we'd have to figure out, okay, what is the moniker for Greg Abel at that juncture? I mean, Oracle of Omaha is taken, so we got to figure out something for him in that future.
Yes.
Cathy Seifert, who is the CFRA Vice President of Equity Research. Cathy, great to have you on here with us today. Appreciate it.
Thanks.